All right, everyone, here we are with ticker symbol LI, Li Auto Inc. And before we go ahead and jump into this chart, I want to say welcome to all my first time viewers and investors. Welcome to my channel, Invest for Tomorrow. And to all my subscribers, welcome back. And let's jump into this chart. So Li Auto has been in a sideways consolidation, but it was in a downward movement. And it hit lows here of about $23.12. And then as it leveled off, it rose up to about $24. And from that point forward, it has skyrocketed all the way up to $36. I mean, it hit newer highs. We're seeing that. We have a new resistance level, which is the highest point reached. And our support level, if you really want to base it off of the last bearish candlestick, is way down here at about $24.54. Now, as this ran up, there was a point where it leveled off and the bears were trying to take over. You can see that here in this leveling off portion, but the bulls continued the run, and we're going to look at what's important for tomorrow and our 50-day moving average and where we stand. So Li Auto, for the bulls, they need to break through resistance. They need to break through 37.31. Very, very important for the bulls. They need to break through this point to reach newer highs, newer levels of resistance, turn that into a support to pull away from the 50-day moving average and maintain this momentum. Obviously, they're far away from the 50-day moving average, but just as volatile as this was in an upward direction, this could actually reach up to the price fairly quickly. And what I mean by that is if we don't break the resistance and we just hang out sideways, at some point, the 50-day moving average will end up above the price, ending up in bearish territory. So super important for the bulls to go ahead and break through this resistance of 37.31 to continue the momentum and reach newer highs. We're currently at 36.10. So the bulls are not that far away from this resistance. Another thing too, this is the highest valuation that the stock has reached. Super important to keep that in mind because it has never seen these numbers before, and 37.31 is the highest point that the stock has reached. So if it breaks through that, it is going to see newer highs. It is going to pull further into bullish territory and new resistance levels. Now, on the other hand, we have our support. This support is 30.50. This is the point where the bulls may not want to be even near, but if the bears accomplish bringing it down this far, we are still in bullish territory. You have that window between support and the 50-day moving average to see how this stock is reacting. How quickly is it moving to newer lows? Are the bears taking over and tearing this one down quicker to the 50-day moving average to get into bearish territory? Or are the bulls reappearing between support and the 50-day moving average? Now, if this stock reaches lower, closer to support and brings itself back up, then the bulls are doing a good job at holding themselves up. But this 50-day moving average will be catching up to the price. So it's super important for the bulls to continue to run up and work their way up to break through this point of reference, which is our resistance level, that is 37.31. I want to emphasize that the bulls need to break through this. And my emphasis on support is pay very close attention to how this stock is reacting. How quickly is it moving closer to support? How quickly is it breaking through it? And how is it reacting between 30.50 and our 50-day moving average of 27.51? Super important point to keep in mind because that lets us know if we're above, we're in bullish territory, and if we're below it, we're in bearish territory. So you're going to want to pay close attention to that reaction between 30.50 and 27.51 and who is dominating the chart. We'll still be in bullish territory, but the bears are getting closer to their goal. So keep that in mind. I hope that with these cues, you guys are well equipped for tomorrow's trading day. As always, if you found this video helpful and informative, please do so and subscribe. Don't forget to click on the bell to turn on all notifications and not miss a single video that I post. Share this with your friends and community. And don't forget to hit that like button to let me know you watched this video. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart, and we're going to see for ourselves. Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up, also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens. For the most part, not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date, it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September. And the next one was on the 6th, which just happened yesterday. And it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up, and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here, and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.